Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel, and welcome back to our special 3-video series on how to invest. Everything from understanding how your goals are the most important part of investing to creating a portfolio, and this video, how to tie it all together with buying the stocks that are going to give you those returns you need. And Nation, I gotta tell you, as important as those last two videos are, and honestly, I think those higher level investing decisions are more important, but the old equity analyst in me is psyched about this video. This is where I get to show you how I picked stocks working as an analyst, working as an equity analyst for venture capital firms, for private wealth, how I compared stocks to invest in and only get the best. So in this video, I'll reveal the 2 ways to compare stocks so you can always know what to put in your portfolio. We'll compare 4 stocks head to head to see which is the best potential for those double-digit returns. Before we get started though, I want to send one last shout out to everyone there in the nation. Thank you for spending a part of your day to be here. If you're not part of the community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now, those of you in the nation have heard me talk about this, but there are 2 ways you can compare stocks, and this is going to be extremely important in making sure you invest in the best. First is you can compare the company's financial ratios against others in its own sector or industry. Remember, the stock market, and really the economy in general, is categorized into sectors or groups of companies that serve a common purpose. The 11 sectors are broad categories like real estate, technology, and energy. Within each of these sectors, you have industries that produce a common product. So software, food processing, biotech are examples. And because the business fundamentals are just so different from one sector to the next, it really doesn't tell you anything if you're comparing stocks in one sector against another. For example, you wouldn't compare Apple Computers, so a tech company, against a consumer staples company like Campbell's Soup. Consumer staples just have super stable cash flows, so they can take on much more debt safely. Now that means the debt to equity of Apple would be really high compared to Campbell's Soup, but wouldn't necessarily tell you that Apple is taking on too much risk because you don't know what it is compared to other tech companies. Alternatively, if you just looked at that operating margin, so the core measure of profitability, Apple looks like a slam dunk with a 25% margin versus just 15% for Campbell's. But you really don't know how Apple looks against other tech companies that typically have those higher margins anyway versus companies in food processing. So you absolutely have to measure companies against others in the same sector or industry. And while you're doing that, you want to ask yourself these 3 questions. First, are most of the ratios better or worse in one stock compared to the other? Does one company have a clear advantage? Second, is that advantage consistent over a long time? Does it come from a clear competitive advantage? And third, is that advantage already reflected in the stock prices? Nation, I know it's more than just plopping down on the couch to get stock picks from CNBC, but this is how you need to be thinking if you're going to be picking stocks. We're going to look at a couple of examples later that are going to make it a little bit more simple though. The other way to compare stocks, and understand you need to be using both of these strategies with every stock you buy, is comparing those fundamentals, those ratios, with the company's own history. And most investing platforms are going to show you this kind of historical data. I'm using Morningstar here, and we can see here, for example, Apple's return on equity has been trending up, so that's great. But its financial leverage has also been trending higher, so basically it's using more debt to boost those earnings. We see here that all 3 profitability measures, that's gross, operating, and the net margins, have all been trending lower since 2015. That is definitely something that we would want to look into if we're considering buying shares of Apple. Whether competitors are seeing that same lower trend in profitability or if it's just Apple. Now you can do all this research on your own, okay, digging into the financial statements or just clicking back and forth between stocks. What's always been more difficult, though, is just comparing a stock's ratios against the average for its sector. So how is the company doing against the group as a whole? It's one of the main reasons why I wanted to create our Let's Talk Money spreadsheet, to create that tool to compare stocks against each other and against each sector. I'll show you how to do this in the 2 examples next, but you just put in 2 stock symbols and click compare, and the spreadsheet is going to pull in from the internet these 10 financial ratios plus the average for their sectors. So I'll leave a link to download the spreadsheet in the video description as well. The spreadsheet was 3 months in the making and includes some great features like portfolio tracking and creating your goals, so make sure you check that out. Now, tying all this into our 3-video series on how to invest, we saw that in our last video in looking at Jeff's portfolio, he needs some of the investments in consumer defensive sector to balance out his portfolio. And let's say we looked at a few consumer staples companies. We decide we want to look a little bit closer at Kimberly-Clark, ticker KMB, and Colgate-Palmolive, ticker CL. We enter the stock symbols, click compare, and the spreadsheet is going to automatically find this data on each stock. So we see that both of these companies are in the consumer defensive or consumer staple sector, and we get these 10 financial ratios for each. Everything from price to earnings ratio to the profitability and dividend measures. All this information downloads automatically from an online database that I pay for to use in the spreadsheet. Not only can we compare the two stocks against each other though, we can also use this to compare the stocks and see how they stack up for the average of the sector. This is something you won't find anywhere else because I had to create it myself by finding an average for each sector and then updating the database every quarter. Let's look at another example, and let's say we're interested in tech stocks, specifically social media. So we want to compare Facebook and Twitter. We can see the PE ratio for Facebook is about twice as high as Twitter, but earnings growth must also be much higher because the price to earnings growth ratio is almost 3 times as high on shares of Twitter when you include that earnings growth measure. Facebook's operating margin is way higher than Twitter as well. Facebook's management is able to convert about a third of its sales into those operating profits, while Twitter is only able to convert about a tenth, so much more profitable on that operating basis. And we can go back and compare the two stocks against the average there for the communication services companies as well. Facebook is relatively expensive here on that PE basis, and even a little more expensive when you account for its faster earnings growth as well. The operating profit margin of 34% is almost double that of the 18% average for the sector, so just confirmation here that the company is really operating efficiently. Even if you don't use that spreadsheet though, this is going to give you an idea of how to compare stocks, both against each other and against the sector average. Remember, you can also compare these numbers, these financial ratios, for a company against the stock's own history. Don't forget to look for the link in the video description below and get that free checklist for all 3 videos on how to invest your money. Click on the video to the right to see how making your goals real is going to help motivate you and help reach that financial future. Join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.